Hi, it's Richard Hemming, founder of Under the Radar Report. Exciting days in the share market, yes, but also really big moves in that all-important investment in Australia, and that's the humble house, the humble home. Yes, that's what we're going to be talking about today, house prices, and what the recent declines mean and what you can do about it. So it's all happening here at Under the Radar Report. So the Australian housing market has really gone, in a straight line, essentially straight up since the early 90s for many reasons. But, you cannot deny that there's been quadrupling of prices during that time in certain markets, tripling, sometimes just merely doubling, but there's been some big growth in the Australian property market. And what we're seeing now is a consolidation, which, although unfortunate, mainly for people at the margin who've paid more than they can afford, is a fact of life. On the edge, there will be hardship, but for the vast majority of those living in houses for 5, 10, 20 years, is it going to make a material difference? Well, if we transition to a buyer's market, the price reductions occur alongside, for sellers and buyers. So, buy and sell in the same market is certainly a hard-won lesson for many. And so in the same way that we've seen prices, certainly appreciate, unbelievably so in the past 30 years, it could mean 5 years of dull returns as wages catch up. So the great thing, in contrast, about the stock market to the housing market is liquidity. Like we saw it in the financial crisis. Your ability to cash out, your ability to get ready access to money. This is the big advantage of the stock market. We saw that in the financial crisis. As I said, it really did fund a lot of people's lifestyles, enabled them to keep going at a difficult time. So, there is volatility. There is definitely volatility in the share market, because price reaction is so instantaneous. As we've talked about, the ETF factor, that's certainly increased the volatility. But what we're seeing is that volatility is manifest at the big end of town. We're seeing that, at the really big end of town with Corning in the US, with Tesla in the US. We're seeing some big selling. Here we're seeing selling in CSL. We're seeing selling in Cochlear. We're seeing some big falls. But honestly, these do provide opportunities, but they are for the patient. The great thing about small caps is the possibility of finding stocks where you can get literally multi-bagger returns. You can buy, if you buy a number of stocks, one or two of them can really make a material difference to your life. It has happened to us. It will happen again. And it is about stock picking. It's about looking for quality. We do have a track record, and it happens quite regularly. I know that there are timing issues. At times we're not always going to be right on that factor, but over time, this is the place where you can make a meaningful difference to your life. And I'm talking about being able to afford a house. I mean, we invested a lot in the stock market in order to get to buy a house, but basically the stock market is a place where you can fast track your returns, and especially at the small cap end of it. One of those stocks that has made a huge difference to us over the years is Austal, the shipbuilder. Like when we first invested in it, or recommended people invest in it, it was about $1 and ignored. It was going through some tough times. But pretty soon, or within years, basically the investment markets came to recognize this stock as being one of the quality shipbuilders in the world, not just in Australia, but in the world, with big contracts with the US, with big contracts with Australia. And this company went from $1 to $8. And, luckily we did take profits at around $7 and above, but it just goes to show that these stocks can really transform portfolios. Now it's about half that, and it's interesting again. Why is it interesting? Because its US operations have been bid for by a Korean group that a couple of years ago did the same thing, and then we dismissed it at the time. But now it does provide an interesting opportunity, and I urge you to read our report. Like, Austal is an interesting company from a financial standpoint. The working capital moves are really big, so you really need to stay on top of it. And that's where we excel at Under the Radar Report, is keeping our subscribers on top of complicated situations. But we not only do that in Under the Radar Report, we also look at industries that are nascent, especially on the commodities front. You can include lithium and uranium in that. Like, we're among the first to be involved in looking in depth at those two markets, and we've been covering them. We certainly did a lithium report a couple of weeks ago. Now we've done a uranium report. And this is fascinating because I guess uranium's a very interesting commodity because supply is so restrictive. Like, you can't just build a uranium mine, and demand is going through the roof. So we've seen that reflected in the uranium price, but we're also seeing a disconnect between the uranium price and the valuation in uranium producers. We look at a number of them, including Paladin, which I urge you, as the ASX flagship uranium producer, is one to look at. I mean, this stock is outperforming giants like Cameco, giants like Kazatomprom. Like, this is an interesting company worth your consideration. Another stock that's been a huge performer, like Austal had, is Scali. We picked that one as well around $1, and right now it's trading at $16. It's been even further up. But we think that this stock is worth your attention too. I mean, Scali is a founder-led company, and it's been through many cycles. And certainly, we get back to housing prices, that is going to have an impact on Scali because their ANZ profits really are an engine room, but they do have a growth option with this nascent operation in the UK. So it's not simple. It's worth doing that complicated analysis, which is where we step in. But importantly, they're able to provide you with a dividend while this transition occurs. So it's around a dividend yield around 5%. So what we like is stocks that are paying you a dividend while management's doing the hard work. And that's another reason why you invest in the stock market. Look, there's no silver bullet, but what I do know is this: if you invest in 10 to 15 small caps that are well picked, you will reap the rewards. All you need is patience. We are proof. Have a go today. Subscribe to Under the Radar Report.